Hey, hello everybody. Let me try to explain why this is supposed to be like a systemic setting. I'm not saying that the market's not going back up. But let me show over here in the book why I told you guys about 5,218. But anyway, let's now see why markets came back up. Right? We need to just to have an explanation. Exactly 327. Look what print in the book. Nearby the bottom, right? When markets backtest 5,203. Of course, this person could you be close this anytime. So as soon market backtest 5,203, somebody sold 5,205 puts and bought 5,205 call. Generates a gamma squeeze for the upside. Okay, generates a gamma squeeze for upside. Makes sense to defend 5,200 right now, at least today. Let me get the spreadsheet. Of course, makes sense at least defend 5,200 because the amount of the puts contracts that you have open. If they sold, they want to collect the premium. Remember that in the morning I cited a possibility that we already start a systemic setting, and I catch over here where you have much more open contracts, call and put, right? 5,180, 5,200. Of course, was different levels that we saw today, right? So makes sense defend 5,200 if they sold, puts, and looks profitable to sell puts at this level because they can control the implied volatility. And the volatility, especially, as soon back test 5,210, dump it. This is like 1 hour graph. But as soon we break down, look the spike. And because that, I'm telling you guys that is a very systemic sell-off. Because they know where the SPY volatility is supposed to be spike and where the SPY volatility is supposed to be sunk. Right? I'm not a genius, but I told you guys all the levels, especially 5,210. So as soon you break down 5,210, you see the spike down, right? And soon as you start to break down 5,218, now that dealers put SPX back to 5,200 lower, you guys saw the spike in the volatility. Means volatility is not suppressed anymore. Okay, volatility is not being suppressed anymore by the dealers. I know that a lot of people talk about the Federal Reserve are behind the suppression of the volatility. Anyway, if it's them, they are already not suppressing this anymore, because you guys have been seeing the spikes up and down in the volatility. Now let me go back and tell you guys why I said before 5,218 supposed to be the floor for tomorrow, but now looks like that will be the top. Because now let me move the spreadsheet for tomorrow. Is where I realize about 5,218. exactly the time that I told you guys about 5,218, 5,000, okay, 5,240 was printed a bullish delta, I mean positive. And as soon markets backtest 5,220, 5,240 became bearish strike. Why? Because the flow from positive became negative. And the break-even of 5,240 at the time that I told you guys was 5,218. Since we didn't break, right, I told you guys, tends to be the floor. So my interpretation was that dealers sold puts, not bought, but looks like that they bought, right? So the 5,218, I bring this to you guys because you know the delta flow from 5,240 became negative. So basically, dealers are willing to sell high. And let me show the order. Let me show the order here. Let me go back to the book. What time? Let me get the WhatsApp. Oh, by the way, I closed the structure, okay? When we start to break down 5,220, I told you guys I closed the structure. I also put 5,210 as a stop. But let me check just the time. Oh, at 2:35. Now let's go to the book. Anyway, now you guys can see over here at the bottom those 4 orders highlighted. And look that, you know, the condition wasn't flagged. So was a naked buy. No, the dealer bought those put contracts. So was exactly at 229. And I told you guys 10 minutes after, right? Yeah, almost 10 minutes after. I told you guys 235. Was exactly the time that my spreadsheet, you know, updated the delta flow at 5,240. See, 5,240 the strike, right? So at the beginning, my interpretation was, oh, the dealers sold, but no, they bought. They bought. And you guys saw the market is sunk right away. And note that right after, at 239, 5,150 and 5,160 is a higher delta spread printed. So what was my interpretation? Exactly, ó, 5,000 the XPX was trading at 5,221. Okay, and the put printed at when SP500 trade at 5,220. So consequently, my interpretation was bullish because right after, a Delta One order printed. So what's happening? Right away, the market sunk, right? The market sank. So this, how can I say, this meltdown could you be a buy opportunity? Of course could you be. Because the point is they are selling higher. They are not selling lower. Market is still in a distribution. Could you go up to 5,270? Could you go up to 5,330? Yes. Yes. But the important thing that you guys need to looking for is dealers are not buying. Dealers are selling higher. They generate a gamma squeeze to the upside, suppressing volatility to make market participants to buy from them. Because that you guys haven't been seeing, the DIX, going above 50%. Is fluctuating between now 45 and 40%. December was like 46 and 44. Now you guys have been seeing 41 and 45. Right? So I'm not telling you guys that the market will crash. I'm not telling you guys that the market is not going up anymore. But I'm showing you guys, what they have been doing. Right? And I hope you guys understand, why I told you guys 5,218 supposed to be the floor. Because right after, the put, the strike at 5,240, and consequently, my spreadsheet show the change in delta flow at 5,240, came, a Delta One order. So, looks like that they already set up 5,218 as a maximum upside target. Or they unwind. They are willing to sell, generate a gamma squeeze to the downside. But, as I told you guys, I show you guys another order regarding 5,225, right? As soon market backtest 5,203, my computer is a little bit slow, but I can put back in the screen if I can. Okay, here. Let me put back in the screen. So as soon market backtest 5,203, let's wait for the refresh. Here, highlighted 327.43, right? Not 27.43 seconds. So somebody sold 5,225 puts and bought 5,225 calls. Exactly at SPX was traded at 5,203. What happens? They bring markets back up. What's supposed to be the break-even of this order? So the break-even of this order, because they sold this one and bought the call, the break-even of this order is 5,205. Ours will work with 10 points spread, so the person will start to make money at 5,250, and you already backtest 5,250. The break-even of this spread, this a bullish spread, was 5,205. So they generate a gamma squeeze to go back up to 5,215. These guys already paid off, right? These guys already paid off. Okay? So looks like that we have a resistance between 15 and 18, right? So, and also what's happening with the volatility? Since we break up 5,210, the volatility melt down. Tomorrow we could go back to 5,250, 5,270. It's totally normal, it's totally possible. I'm not telling that we cannot go, but I'm telling that the market starts to be really dangerous. Really dangerous, right? Because, you know, they are selling high. So nowadays, every melt up tended to be a sell opportunity, but as soon reach a support, is a time to close, because they have been generating, you know, gamma squeeze to the upside, and vice versa, okay? So I hope you guys understand this is a very, very well systemic sell-off. Market will crash. Yes, will crash. Nobody knows when. We cannot be like Twitter, looking for a crash 100% of the time, because we don't know when market will going to crash. They are selling, but remember, they hold trillions of dollars in assets. This take while, you know, to close their long position, and of course take a while for them to be ready, you know, to melt down as well, to be profitable. But remember, market never walk in the direction that cause, how can I say, I mean, markets always go into the move to the direction that cause more pain. And why you guys have been seeing like in 1929, markets have been going up without a pullback? Because the amount of the short sellers. Because dealers never reward everybody, right? Never. And of course, if you have much more short seller than longs, they can sell premium and they can force them to buy higher, because they want to sell higher, they don't want to sell lower. Imagine if you have a bunch of short sellers and then dealers start to sell, then you sell low, right? So when you have a lot of short sellers, that's when the market is going up, because dealers want to get out. Everybody knows that this crash is the easiest crash ever. Everybody now is understand that. But the problem is, everybody's trying to be billionaire from one day to the next day, and dealers will not give this for free. Never. Even Michael Burry in the Big Short movie, you know, get rich right away, because, you know, his portfolio was down 70-80%. If you guys watch the movie, you guys already realize that they called it, he sent an email to all the, you know, the investors, said, until now, no, from now on, everybody is prohibited to withdraw money from the fund. You guys saw the CEO from the bank that he worked for went to flew to California to have a meeting with him. But remember, he had like a blank letter signed up by the CEO that give, you know, authority to him to do whatever he wants. So the CEO didn't have power, you know, to revert what they did. I mean, to prohibit the withdrawal. Of course, at the end, he was profitable 400, 500, 600%, but was painful at the beginning. And remember, he invests with somebody else's money, not with his money. Of course, that at the end he received bonus, and of course everybody, all the investors get happy. But at the beginning, nobody was happy, right? Nobody was happy. Check what's happening with the markets right now. Back test 5,215, went back down. Volatility is still suppressed because we are nearby 5,210. Take care, guys. Market became dangerous.